Hello, everybody. Welcome to Strategy Galore. I'm your host, ready to give you one of the best Nasdaq trading strategies. Stay tuned. As I've already said, this is the $250 to $550 per day Nasdaq levels strategy. Please don't forget to like, subscribe, and smash the notifications bell to get more of this, right? And so, first things first, this strategy works on mobile phones, laptops, PCs, tablets, whatever you can think of, right? And so now let's get on to the strategy, right? With this strategy, you only need two things, right? And these are the horizontal lines and the behavior of the market, right? Now let's start with plotting the horizontal lines. Your horizontal levels are plotted on numbers that end with 000, 250, 500, 750, and back to 000, right? A lot of people use the 100, 200, 300, and 400, and so forth, right? But you know, when I used it, I used to experience a lot of losses, right? And so ever since I changed to this one, a lot has been happening, right? A lot of banking has been happening. All right, and so let's look at a screenshot before we jump onto the live charts of the horizontal lines in tech. And so as you can see right here that let me just pull out a highlighter so that you can see, right? This is the first entry, right? All right, here as you can see the market, the overall trend is to the downside, right? So when the overall trend is to the downside, we are only looking for sell trades, right? And so as you can see here that we had an entry right here after this rejection candle. That was your entry for the 250 points, right? Remember, a single point with indices, a single point, right, equals to a single dollar, right? And so you had the first trade right there. We don't take any buy trades, right? Because remember the overall direction. And so the market came back to this area, and then you went in for another entry. It didn't go down immediately. It came up for a re-entry, and that's where you enter again before it gave you another 250. But because there was two entries, that is now 500 points, and all this together you're now running with 750 points, $750, right? And so the market came back up again. This again was your entry, right? This area proved to be very strong. This was your entry. It went down for 250, but not only that, but also for an additional 250, which made it 500 points, right? And as you can see, the market came back up, but it did not really touch this area, so then we don't really count it as an entry, and so we saw the market coming back down and breaking this area, right? Breaking this area and sort of consolidating on the horizontal area. And so our entry was exactly right here. Your entry is exactly at at the close of this rejection candle, because it just shows that it's rejecting this area, and where we headed to the downside, an extra 250 points, right? And so we saw the market dancing here before coming back up, right? Remember, we don't take these trades. And so we saw the market coming back up and slamming the area, right? As it hits the area, our entry is here, and then we come back down again, an extra 250 points, right? And then as you can see here, the market came back down and proved to have broken this area. But as you can see here that this was somewhat a false entry. Your entry could have been here, but then it was a false move, because then your stop loss would have been hit, but your stop loss would be like 50 points or so. So it's sort of a 1 to 5 risk to reward ratio, considering that we are risking 50 points and expecting to get 250 points, right? So it's a 1 to 5 risk to reward ratio. It's a very good one, right? And so as you can see, the market came back to the upside. Let me just erase this for ease. Let me just remove this. Okay, now that it's removed, we're going back to our pen. see the market came back up and came to our area, right? After hitting this area, you saw a rejection candle where we had it to the downside, an extra 250. You just closed this, the 50 points that you lost here, and you made an additional 200 points on top of that. So that is the nice part about this strategy, right? And so you saw the market coming back down, and then we broke this area. You can see the strong candle broke this area and came back to it, right? And when we came back to it, we sort of made this bearish engulfing candlestick, right? Bearish engulfing candlestick right here. This is your your entry is here, and also at this area right here, right? As you can see, the market tapped onto it, gave you a rejection, and then it came down. But it's not just a single area. You don't have just a single entry, you have two entries, so this is an additional 500 points. So the market broke down again, and then it gave you this rejection. You would have entered right there, however, no, not there, but here at the close. But however, you would have lost this trade, or you wouldn't have even gotten in the first place, because now where would you place your stop loss? There are no lower highs, so there's no area to place your stop loss, because if you were to put it up here, you'd have over 250 points stop loss, and that is a lot of points to lose, right? And so it would have come down but then went back up. Had you entered the trade, you would have lost. But if you knew that this was a very huge stop loss, you'd have stood on the sidelines and waited for a perfect entry. And as you can see, the market came to the upside and gave you a rejection. We don't enter just yet because the market hasn't broken any key structural levels, right? It hasn't broken these areas. So, and as you can see, the market started getting in with heavy momentum. As you can see with this candle right here, this is heavy momentum, right? And as you can see, as it approaches this area, we see an acceleration of momentum. These three green candles, you can see that momentum is accelerating with these 1, 2, 3 candles. Momentum is starting to accelerate now. As you can see, the market started playing off of this area, and then it sort of pushed out of it, giving you a bullish engulfing candlestick, and it also broke this area of structure. Now after this is an entry where going to the upside, aiming for how many points? 250 points. And as you can see, the market also broke this area and then sort of retested and went to the upside. And I'll show you on the real chart a continuation of this screenshot. Right now we are coming to the behavior of the market. Right, the behavior when the price approaches horizontal levels, we look for two things. What are those two things? Right, the first thing is the momentum of candlesticks, right? And secondly, the candlestick formations. Right, let's get on to the momentum of candlesticks. As you can see right here, we have an acceleration and deceleration of momentum. Right, when we start with the decelerating of momentum, I wanna mark up for you real quick, just to ease understanding, right? And so you can see right here, let's say we have horizontal lines, hashtag the key areas, right? And then we have another area. Ooh, that's an ugly. We have another key area right here. Just remove this. We have another key, and as you can see here, when you start with more decelerating momentum, you will see here that the market was in a very strong uptrend, right? As you can see, we have a strong upward momentum, and then as you can see, the more we go up, the less momentum there is within the candlesticks. As you can see, they're getting smaller and smaller and smaller. As you can see here, momentum starts to slow down. Here you can see very little momentum. So in most cases, you'd wait for stick to fall, and that will prove reversal, a pulse reversal. As you can see right here, maybe you might get like a bearish engulfing, as it is the one that we get the most with this strategy. And your overall perspective on the downside, right? And when we come to accelerating momentum, right, as you saw with the previous slides, when you roll the video back, you'll see that we had an increasing momentum, right? When we have increasing momentum, in most cases the market will tend to break this area. Remember, these red areas are those ones, the 000, the 250, 500, 750, and back to 000. So these are the strongest of the levels, right? And as you can see, the market would have broken this area, right, and come back to it. Right, as it comes back to it, what are you expecting? You, as you know the strategy, you sort of know the secret to it, right? As you know that we're expecting a bounce from this area going all the way to the other side. And so that is all there is to momentum. Now when we look at the candlesticks, look at the this is just a continuation of the previous slide. As you can see, as I already said, that the engulfing candlesticks are the ones that we receive the most, as you can see here, with the high momentum, right? The first thing on the criteria is, has it reached the key level? As I've already said, our key levels by now, you know that it's a 000, 250, 500, and 750 key levels, right? Has it reached it? Yes, it has. As you can see here and here, it has reached the key areas. And the second thing, has it closed above or below the range of the previous, the two previous candlesticks? Yes, it has. And when you get this criteria, you go full on, you hit it, right? And now comes medium momentum. Right now we're starting to market. As you can see, the criteria, has it reached a key level? Yes, it has. You know the key levels by now, and their numbers, right? It has reached a key level, and you can see that it also closed, above or below the range of a previous candle. You can see it closed above the range of the previous candle, and here it closed below the range of the previous candle, right? So as you can see, with this one you can still enter, but just have your stop loss intact, just to preserve your account. And as you can see, with the low momentum, right, still the same criteria, right? Has it reached a key level? Yes, it has. However, with this one, it has closed within the range of the previous candle, not below or above it, but within its range, meaning that with this one you have two options, right? You can either enter and have your stop loss very, very, very tight. You can choose to sit on the sidelines and just watch how it goes, and expect another entry. And I'll move you on to the next slide. As you can see here, we have the reversal patterns, right? With these reversal patterns, with the bullish reversal patterns, you'd expect for the key area to be here, 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 and here, right? And we're expecting for the market to be coming from the downside, and we're expecting it to be heading up, coming from the downside, heading up, downside, heading up, downside, downside, heading up, downside, heading up, right? And here we have the bearish reversal patterns, right? You can see our key areas should be here, 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 and here, right? And what are we expecting with these ones? For the market to be coming from the upside, going down, 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 right? And so on the next slide, before we move to the charts, right, remember this, remember to wait for the candlestick formations to be fully formed, right, before executing any trades. Why? This is to prevent getting into unnecessary trades that will later on become unnecessary losses, and you end up losing your account or so forth. So have time to wait a moment, right? And that is how you get on best trades, by waiting for the formations to be fully formed, right? If you want to see the formations, you can roll back the video and you'll see the formations. You can take a screenshot, right, of it. And so now let's move on to the live chart and check out the live analysis of this. And here we are on the live charts, as you can already see. Right here we had our first entry. Let me just remove this. We had our first entry right here, right? And so as you can see, the overall trend is to the it's to the downside. As you can see here, the first entry here, the market sort of came down and then came back up. You could have re-entered if you also have like an additional strategy. But yeah, you would have had your 250 points to the downside, and had you held, you would have gotten yourself 500 points. As you can see, the market started dancing above this before breaking out. So here we didn't receive any entries, but it's still fine. We're still keeping it going. As you can see right here, still keeping it going. As you can see, the market eventually broke out of this area. Now as the market breaks out of an area, I place my sell order right here and wait for the market to come back to retap into the area. As you can see, after the breakout, the market immediately retapped with the next candle, and so that is your entry right there, going an extra 250 to the downside. Right, you can choose to trail this or put your take profits. It's your choice, right? And as you can see, the market came back again for a re-entry. You enter right, you place your sell order right there. As you can see, the market approaches, place your sell order again, and the market taps into it, and then the market falls down an extra 250 points, right? Remember, the overall trend is to the downside. Even if you see such things, the overall trend is still to the downside, right? And so as you can see right here, the market sort of came back. As it comes back into here, you already have your sell order, right? As you can see with these wicks right here, you already have your sell order right there. The market tips the first time, the second time you got two entries. The market falls 250, but if your risk appetite is a bit higher, then you could have left it to go for 500 points. And as you can see, the market is starting to change its trend direction when we broke this area of structure, right? When we broke this area of structure, as you can see, the market broke the area of structure and sort of came back, right? This whole move, when it comes back, your entry is right here. So as the market breaks this area of structure, you're just waiting for just put your buy order right here. The market taps into it and then goes up 250 points, right? And as you can see that it eventually breaks up this area. As you can see, the market came back, but it did not really tap this area, right? So you could have still placed your buy order right here, but you would have been in a big drawdown, right? As you can see, the market eventually came back up again and gave us proper entries with proper drawdowns, right? And so we can see right here, it gave us the first entry, and then it gave us a re-entry, and then we went up, right? These two all make 500 points, right? And as you can see, the market headed up. We didn't get any entry right here. It's still fine, right? And as you can see that we came back and retapped this area, right? As the market starts to show this bearish movement, you already place your buy orders right here at this key area, right? And as you can see, the market gave us a little bit of drawdown, and then it went up before eventually dropping down. So if you trailed this had you trailed this move, you'd have gotten out with a couple of points, right? And as you can see, the market eventually broke down with heavy momentum, and now after it breaks these areas of structure, you're now looking at some bearish sentiment. We're looking for sell trades, right? As you can see, the market broke out of this area and came back out of it. The moment it breaks out with this candle right here, right, you already place your sell order right here and wait for the market to pull back down. An extra 250 points is made, right? And as you can see that the market came here, and then after it broke this area again, you could have placed your sell order right here and trailed into the downside, right? And until you got stopped out. But the nice part about trailing is that you got stopped out with some dollars made, right? And as you can see, the market still continued being in a very choppy state. But as you can see, we eventually gain some momentum right here, and now as it breaks all these highs and everything, your sentiment changes, right? That your direction changes. As you can see, we went higher with heavy momentum, right? And as you can see, the moment the market broke this area, place your buy orders right here. The market comes back, it taps into your area, and then you go up another 250 points, right? Remember, a single point is a single dollar, so 250 points is $250, right? And so as you can see right here, the market broke out again. Would have placed your buy order right here, so that when it comes back, it taps onto it and it goes up. Even though we didn't reach the 250 points, had you trailed your whole move, you would have gotten out with a lot of points, right? Over, I don't know, over 150, as you can see. And as you can see, the market came back to retap. We would have gotten in, but you would have gotten stopped out, or with some points. As you can see, the market broke this area of structure and then we fell to the downside. I think by now you're starting to get a sense of how this works, right? You're starting to get a sense of how this works. You can see we didn't get an entry right here, but it still went down, but it came back to tap onto us. So after it breaks, you just place your sell order right here. As you can see that this breaking candle broke previous structure, right? So you just place your sell orders right here and then just set aside. As you can see, the market gave you a sniper entry and then came down 250 points, right? And as you can see, we didn't get it break here, so there wasn't really any entry, but we got an entry right here. Like with this break right here, we sort of place our sell order right here. The market comes back, taps onto it, gave us a little bit of drawdown before eventually coming back down an extra 250, right? An extra 250. As you can see, the moment we got up, market broke this area of structure right here, and so with this one. So as you can see, after it breaks this area of structure, we place our buy orders right here. The market gave us an entry the first time, as you can see, but it didn't go with that much momentum. It started coming back. You place another order right here, you have a re-entry, you go up. Instead of 250 points, you go up with 500 points, right? As you can see, we also broke out of this area with a gap, and then you can see the market came back to fill that gap. And so after we break out, especially with a gap, place your buy orders right there. See, you place your buy orders and sort of trailed it to the upside. Good. You would have gotten stopped out at some point, but you would have gotten stopped out with a couple of points, right? And as you can see here, we had no entries, but the overall trend is still to the upside, right? And as you can see, the market broke out with this candle, right? After it breaks out, remember this is the 1 hour chart, so you still have time to place your entries. So after the market broke out of this area, as you can see, it came back to retest with this candle. That right there is your entry. Came back to retest with this candle right here. That is your entry, and then you went up an extra 250 points. The market broke out, and as you can see, the market either breaks out with a strong candle or a gap, right? And both of them still suggest a move out of that area. As you can see right here, we broke out with a strong candle. After this breakout, your entry is right there, is right here. With you put your buy order. After this breakout, just place your buy order and set aside. As you can see, the market gave you a little bit of drawdown before giving you your 250 points, right? And as you can see right here, also we broke out and then the market came back. So after this breakout, right, before this even forms, after this breakout, you already place your buy order right here. The market taps into it, and then you sort of trail it to the upside. I think by now you're starting to catch onto how this works, right? You're starting to catch onto how this works. I want to go to today and sort of show you, right, where we are. And so this is what I had in mind, right? This is what I had in mind, of the market sort of coming up here and looking to the downside. And this right here is the exact, this was a news event, right? We predicted this move and it happened exactly that way. I'll just place a screenshot right here, right? As you can see with the screenshot here. And so yeah, that is all I have for the live analysis. I hope you use the strategy, and as it works out, just send the comments and tell me how it goes, right? And from me and the whole crew, it's a goodbye.